right, let's move on. And the special show on India Investor Week, let's welcome Harshvardhan Roongta, CFP Roongta Securities, who will be answering our viewers' queries and will be doing their life financial planning. Harsh, good evening and welcome to the show. And let's take Anand's question first. And Anand says that he wants to invest for 20 years and he wants to know if he keeps investing this particular amount, which is almost 6,000 per month, how much would he be able to accumulate after 20 years? Current investments, he has an SIP going on in SBI Focus, Tata Small Cap and Parag Parikh Flexi Cap, 2,000 rupees each. All right, 20 years is the time frame. Yeah, that's clear.
So, Kavita, he could continue investing in three schemes with an amount of 6,000 rupees. That's not a problem. Just that as and when his income goes up and he wants to increase his SIPs, it's better to ensure that he keeps only three schemes in his portfolio until he invests about 15,000-20,000 rupees a month. Now, just one change I will recommend to him, that would be to replace the Tata Small Cap Fund with a multi-cap fund. So he could go in for a Nippon India multi-cap fund. In this way, he'll have a focused fund, a flexi cap, and a multi-cap fund. I think that approach will be a better balanced portfolio rather than having one pure the small cap fund.
Right, Feroz. Feroz, also, we've been seeing a certain category of funds, especially flexi cap and small cap category, a lot in investors' portfolio. How can one really understand and avoid over diversification of this particular market cap in their portfolio? Any specific thumb rule or strategy that you might want to recommend to our viewers? Harsh, can you hear me?
Yeah, sorry, I thought the question was for somebody else. Okay.
All right, my bad. Sorry. So, yeah, you heard the question.
Yeah. So, Kavita, yes, it is true that, off lately, all the portfolios that we have been seeing essentially have a lot of small caps. I'm not really worried about the flexi cap category. I'm particularly concerned about the investments people make into the small cap funds. Now, invariably, the retail investor has looked at past returns and has started allocating to small cap, but that's not the right way. So, yes, I mean, when you start investing, you may have certain portion in high risk categories such as a small cap fund, but have a portfolio of essentially 50% being into large caps, 30% in mid caps, and probably 20% into small caps. If that's the allocation you want to make. But looking at past returns and having a heavy allocation into small caps is not really the right way to go about it.
Right, Harsh, let's move on to Nagesh Borate's question. He says that he is 40 years old, working in a private company, and monthly savings is around 1,36,000. Term insurance he has is of 2 CR. Mediclaim he's covered with 10 lakhs cover, which is self plus employer. Emergency fund also he's gotten sorted for himself, which is around 10 lakh rupees. Although we'll have to see if it's enough for him. But in other details, as far as his family is concerned, wife is a homemaker, 38 years old, and daughter, 10 years old. Okay, so he's investing in a couple of funds. So he sent his entire portfolio, which is a lot for me to read out, but then you have the fund's name. Axis Blue Chip, Axis Mid Cap, SBI Small Cap, ICICI Pru US Blue Chip. He's got a debt portfolio, a fixed income portfolio, where he's investing in PPF, NPS, and EPF. Okay. In terms of gold investment, he's got Nippon India Gold Savings Fund, and index also he's investing, which is HDFC Index Nifty 50, Nippon India Junior Bees FOF, and Motilal Oswal Nifty Midcap 150 Index Fund. He's got a certain amount in stocks as well. The overall valuation of his portfolio is almost 2 CR is what he's given us. He's given us the monthly contribution also, as in how much is he contributing in equity, which is NPS and mutual funds, equity, direct equity, that is stocks, and index also. Harsh?
So, well, Kavita, very rare to see such a meticulously planned portfolio, and the allocations, the asset allocation, the diversification, I mean, the kind of goals that he's set and he's planning, he's quantified those goals. So, well, Nagesh, I'd like to compliment you for such a detailed and a meticulously planned portfolio. So, I think you're well on your way to achieve all your financial goals. So, one of your questions was, with this kind of investment and the corpus that you have, would you be able to achieve all your goals, which is retirement, your daughter's graduation, post-graduation, marriage, etc.? Well, I have no doubt in my mind that with this kind of an investment strategy that you have, asset allocation, and the corpus that you've already accumulated, plus the investments that you're making every month, you'll be very comfortably able to achieve all your financial goals. In fact, far more exceeded. Now, one suggestion I have with regards to your schemes in the portfolio. So, in place of Axis Blue Chip Fund, I would request you to look at another large cap fund. You could look at multi cap. You could look at a smart beta fund because there is some scope. You have index funds in the large cap category. So having a smart beta fund or and within the Access family, you have two schemes. So might as well go for another. So I can recommend one smart beta fund for you, which I think your profile very well fits into. You could look at the UTI Nifty 200 Momentum 30 Index Fund. So I think that's just one change I would recommend in your portfolio. Other than that, you're doing extremely well, and please continue the way you're doing.
All right, so that's the advice for Nagesh. Let's take up Kirtan's question. And he's highlighted two important investment goals for him. One is child education. For that time horizon is 5 years. Risk profile for this particular goal is moderate, is what he's written. Allocation, he says that 1 lakh SIP split equally between two aggressive hybrid funds, which is ICICI Pro Equity and Debt and Kotak Equity Hybrid. The second goal is his retirement, 15 years of time for that, and risk profile for this particular investment is aggressive. Allocation again 1 lakh SIP split across 5 funds, which are Parag Parikh Flexi Cap, Edelweiss Mid Cap, Quant Small Cap, Motilal Oswal Nifty 500 Momentum 50 Index, and ICICI Pro Nasdaq 100 Index. All right, so Harsh, I think you're really lucky. You've been getting queries where investors seem to be knowing a lot about the kind of approach they need to have, in their investment portfolio. What do you say?
Well, Kavita, I would compliment you for this because I think you've been working
Thank
very
you.
hard in ensuring that investors and your viewers actually get the right suggestions. So, I mean, I know that you've been working in this field for more than what, 10 years now? And the kind
Yeah.
of work that you've done across, I mean, it's, I think, all thanks to you and your channel that viewers have
Thank
now
you.
started
Thank
looking. So,
you.
I want to highlight this about Kirtan. Okay, so Kirtan is one individual, has two goals, and see how nicely he has differentiated between the two goals and had a risk profile separately. So child education, this is a learning for all the other viewers as well. So that's why I'm highlighting it. So Kirtan, my compliments to you again. So child education, the goal is 5 years, and he said the risk profile for this particular goal is moderate. Retirement 15 years and the risk profile aggressive. Now one individual is able to segregate that 5 year I need to take a moderate risk and 20 year I need to take aggressive risk. Now, this is what viewers need to understand. Normally, you would see people come into the market, they will say, I am an aggressive investor. Now, if I want to invest even for 1 year, I will take aggressive calls. Now, that is where people go wrong. So, I think Ketan is done extremely well in his financial plans. I don't think there's any reason for me to make any changes in this portfolio. In fact, I will go one step ahead and say that these are the kind of investors who should look at investing into direct plans. Now, unfortunately, we have people who do not understand the process of asset allocation, financial planning, portfolio curation, and only to save costs, they invest into direct plans and they make a mess of their entire portfolio. And so, if you have to understand and look at a profile of an investor for whom a direct plan has been introduced, it is for people like Nagesh and Kirtan, the two viewers that we spoke about today. These are the viewers for whom a direct plan has been introduced. So, Kirtan, go ahead in what you're doing. You're very well on your way to achieving all that you have desired.
Harsh, but we don't have the entire corpus that he wants to accumulate. I mean, he's not given the corpus accumulation figure, for child education and for retirement. Is that okay, or how do you think he can come to that figure? I mean, since he's planned it so well, I'm sure he must be having some figure in his mind which he might have not shared with us. But what should be the way towards it?
So, see, Kavita, there are two ways to go about doing this. One is that you start your journey by saying that my end goal is say 5 crores, 10 crores, whatever. Your retirement is say 20 years away from now. And I start with, I'm planning to accumulate 5 crores. Then you work backwards to say to achieve that 5 crores in the next 15 years, how much do I need to invest? Now that figure will come to a certain amount, right? What if you cannot invest that amount? Okay, so this gives you a path to say that, okay, this much I need to invest every month. Now I can start, suppose that figure comes to 40,000, for example. You say that I can invest 20,000, let me start the journey, and as and when my time goes by, my income goes up, I will increase my SIP investment because I know that I need to invest 40,000. The other methodology to start is would be say that like what's the max I can invest today? So today I can invest say 1 lakh a month. This is what Kirtan has said. So you start the journey with that, and once you get comfortable in that journey, then at the next step also you can introduce a concept of saying that okay, now let me put a value to that target. So now retirement, how much am I on my way to accumulate? So both ways are correct. Just as sooner or later, yes, you will have to start figuring out how much do you need. Now that could be at the beginning of the journey, or once you start the journey, probably in a year or two you can even do that. So yes, the next suggestion for Kirtan would be that do try and look into the factor of setting up a target as well, because that will give you an idea if you need to invest more, and if you can invest more, might as well go ahead and do that. So both ways are fine. Just as sooner or later, yes, you should fix a number to your target.
All right, Harsh, one last question and a very interesting question. I think you will have to first explain our viewers what exactly is the question. This question is from Jishnu, and Jishnu says that he has seen most advisors suggesting to keep small and mid cap allocation to 35% or lesser, and rest should go to large cap. Now, he wants to understand that why can't we allocate higher percentage to these mid and small cap as they have very high market capitalization, thereby very high liquidity as well. Very interesting question. I mean, a lot of a major aspect of this particular question also revolves around one's risk appetite, though. But what is he trying to, ask from us in terms of help over here, Harsh?
So see, Kavita, the question, what he says is, so 20 years ago, the definition of mid-cap, a company that fell into the category of mid-cap was say probably 5,000, 10,000 crores worth. Now, because the markets have gone up, the same company is valued today as say 30,000 crores. Now, despite being, so 30,000 is a large cap according to him. So he's saying why should we then not move into a company like this, which in terms of market capitalization today has become 30,000 crores, but still in that context falls under the category of mid cap. So I'll explain this with an example. So as of today, the latest AMFI list for defining companies which are large cap, small cap, and mid cap is based on ranking. So say for example, the top 100 companies in terms of market capitalization are categorized as large cap companies. So starting with say Reliance Industries being on the top and going up to the 100th company today in that list is Bosch Limited at 84,000 crores. So it is safe to assume that all companies with a market cap of 80,000 or 84,000 for that matter and above are categorized as large cap, Bosch being the 100th company in that list. Now 101 to 250, so 150 companies after the top 100 companies are categorized as mid-cap companies. Now market capitalization of the 250th company is 27,000 crores, and that company is Blue Star. So all those companies whose market cap is between 27,000 crores and 84,000 crores are mid-cap companies. Now, all companies below market capitalization of 27,000 crores in this particular list, which is the latest AMFI list as in June 24, will be all small cap companies. Now, if an investor says, I want to invest in a company which has a market cap of say 20,000 crores, despite it being in the list of small caps, an investor, if he's comfortable with the market cap, can most certainly invest. There is no harm because 20,000 crores worth of a company is by no means a company which can be neglected out of the list of investments. So, clarifying the viewer's question, he was concerned saying that the company which was valued at 5,000 crores 20 years ago probably is worth 30,000 crores today. So, why can I not invest in that company? And if it falls in mid cap, should I restrict myself to having only 30% allocation to that? No, that's not the case. So if you're comfortable investing in a company which has a market cap of 30,000 crores, you can most certainly invest. AMFI has defined it because it doesn't fall into the top 100, the sequentially within the top 100 ranking, doesn't mean that you cannot invest in it. My only concern is that how many people go into those details, how many people actually understand and look into the list of the companies that the schemes invest into. So you pick up a small cap fund, you go into the portfolio, the fact sheet, and then you see that which companies are investing into. And then you are able to take a better call on this. But most investors are not able to. So as a standard retail investor formula, we say 50% large cap, 30% mid cap, and if you want to go to 20% small cap. That's the only reason. But if the viewer is going into the details, If Jishnu can go into the details with market capitalization, most certainly going to pick a category that suits him best.
All right. No doubt today we've got questions from very advanced investors. But on that note, it's a wrap on the show today. Thank you so much, Harsh, for being on the show and helping our viewers with their financial portfolio queries. And I'm going to leave our viewers with our WhatsApp number email ID where you can send across your questions to get your life financial planning done. Thank you so much for watching. Goodbye.